Hello, everybody. Kirk Spano, Retirement Income Options and Stocks of the Week. We are going to work our way through a new format for my Retirement Income Options article, which is probably a lot like an older one that I did. I had input from dozens of people who follow along that it'd be nice to just handle the trades week to week rather than giving so many options. And I think that that is probably the best way to do it. So we're going back to that approach. And I'm going to give you what I think are the closest trades to make this week for selling options. And we'll talk about those companies as well. So we'll kill two birds with one stone. Very easy format, retirement income options, and the symbols, same thing as at fundamental trends. So regardless of whether you're margin of safety or fundamental trends, same article, same everything, just different website. All right, so what do we know? I will be rewriting the using retirement income options piece to make it a little bit easier for folks. And the first section of the new article is cash secured puts for dividend stocks. Everybody loves dividend stocks. One of the companies that I've been talking about has been Innovative Industrial Properties. Now, when this was going up to 100 and 150 and 200 and whatever it got up to, everybody loved this stock. Everybody was talking about it. Go look at the articles on Seeking Alpha of all the authors pumping this stock and what happened. It just came down and down and down to the point now where it's closing in on being a buy finally. I had warned you way up here that it was probably going to under 80, and here we are at what, 71? So I warned you, it had that last spike. Everybody said I'm stupid, and they didn't call back, even though look at this. All right, so why do I like Innovative Industrial Properties? Well, first of all, eventually, and they've been so close, eventually you're going to see Congress allow the marijuana industry to use the banking system the way everybody else does. I don't know why this is so hard for them to do, but seeing as they've moved away from prosecuting anything but serious crimes, you have to think that at some point soon, these companies don't have to play the money movement game that they've been playing. And they just get to put their money in the bank like everybody else, like every other business. Now, with Innovative Industrial Properties, one of the things that they have going for them is that they are set up very, very well for growing produce, vegetables, and berries and things like that indoors. As climate change continues to progress, and I know this is a slow-moving thing, but we are losing a couple percent of our arable land every year. And we need to use a lot of it for corn, wheat, and soy. So vegetables that you want to have on your table, that you want to have in your fridge, if you're not growing them yourselves, you have to go somewhere and get them. And they're hard to grow on the farm. They just get wrecked too often. So growing certain produce, leafy vegetables in particular, but like I said, strawberries grow very well indoors. You're going to see companies like Innovative doing more and more of this. A couple of their competitors, because they were early, have taken it on the chin, and a couple of them have gone bankrupt. This company has the marijuana business. We kind of know what their numbers are going to be at the low end. They're very close to the low end right now on all their financial numbers. So you start to look at this company and go, they've made the financial adjustments. The financial adjustments are priced in. We just have a little bit more downside momentum. Where can this company get to? And it looks like you get kind of a disappearance, right? The sellers disappear down here. And then you start to get your institutional buyers. These lines down here usually move up a little. So a price in the 50s is probably what we're looking at for Innovative Industrial. Now, could it fall straight down to 52? And could it go all the way down to maybe 40? It could. So that's why we're watching it right now. I don't have any particular recommendation other than you need to pay attention. You need to go to their website, read their presentations, learn about the company, then understand what the market is missing, which is what I just talked about, is that they have an additional business that they can push into that they haven't even done yet. And it'll be easy because they already have the robots in place and the structures in place, the greenhouses in place to grow more things inside than marijuana. And like I said, marijuana's got positive catalysts coming from Congress at some point. and there's going to be more demand for greenhouse grown vegetables in the future. That's one of the businesses I've looked into doing in the Milwaukee area. Somebody else is doing it, and I know there's 2 or 3 others that have tried and failed, and now there's investors replacing them, and now they can get in a more timely fashion and cheaper. So this is just one of those hype cycle things where it spiked, came down into the valley of despair. Now somewhere in here you should be acquiring it because the future is probably pretty good. Do not really have any other dividend stocks that are right there yet, but there's about a half a dozen that are closing in. And as we get to within a week or 2 of wanting to do something with them, I will feature them in this section. Cash secured puts for growth stocks. If you're aggressive and you understand and believe in the Bitcoin story and the dozen or so survivors in other coins and other crypto, then Coinbase pretty much as beat up as it can get. Does it get into the 40s? If it does, that's cheap enough for me to want to buy it. Same thing with Block. I've actually sold puts on them before, rolled them up a little bit when they were assigned to me, got my money back, plus a small gain. I have exposure to them in an ETF. I really like Block. Block is probably my top growth stock to target because they have such a good business online and with the small retail investors, with the small businesses. So Block is attractive not because of the Bitcoin holding, that's extra. That's your gravy on the icing on the cake. So as the economy speeds back up next year, and it will, Block is going to do very well with the small businesses. Teladoc. I don't have a particular recommendation for Block yet because they're not right on top of where I want them to be. As they get there, I will have that recommendation. In the meantime, start reading, if you're a growth investor, start reading their presentations online and go back 2 or 3 years and work your way backwards. Start in about 2019 and read those presentations up to the present. They're PDFs, they're easy to breeze through. There's like 8 words and a picture on most of the pages. So learn the businesses and understand that Block isn't just Bitcoin. It is small business and online business. And they're very attractive as a takeover target. I could see them splitting this company in 2 pieces, actually, and selling one of them. Teladoc. One of the topics I've covered is that we really need to see deflation in healthcare in the next 10 to 20 years. I know that it's coming. I've seen it. I've been in the hospital systems. I've talked to people. There will be deflation in healthcare because they're getting rid of a lot of the administration. Right? There's not a lot of tasks that need people to sort them out. The AI and the technology is doing a lot of that. They've implemented a lot of that over the last 3 years. And now you're seeing one person handle what maybe 3 were. The biggest hospital system in Wisconsin just went through a round of layoffs. And you wouldn't think that given the demand for healthcare as the baby boomers age, but they're getting much, much more efficient. I'm going to take a look at the hospital systems too as an investment opportunity because if they're beat up, on falling profits recently, they'll probably be companies that can break out just like the insurance companies did a couple of years ago when they automated their claims. I think the healthcare companies and the hospital systems can do the same thing. Teladoc is one of the companies that is likely to drive deflation in healthcare. The AI companies will help too. We already know that Watson is better at creating a diagnosis or finding a diagnosis and creating a treatment plan than any doctor on the planet, including Dr. House. So when the AI can take a look at your symptoms that a doctor and a nurse put into the system and say, well, it's 80% likely to be this, 20% likely to be that. Let's work on the 80% game plan and keep an eye on the 20% just in case it's that. Versus a doctor or several doctors who have to look at 7 or 8 scenarios. Everybody has their bias. The AI just cranks out what's most likely. And the data so far is that Watson over at IBM has been like 90%, literally 90% better at diagnosing and creating a treatment plan than the doctors. So the doctors are going to start providing services more and being able to handle more people than having to try to figure out what's actually wrong. They'll be there, but they'll just be part of the team supporting the AI in the future. And that's going to create a lot of efficiency, which should, again, help bring about healthcare deflation that we need. Otherwise, Medicare does actually become a problem. Everybody talks about Medicare as a problem. It's not a problem yet. And if we can lower healthcare costs, it's for sure not a problem. So here's the chart of Teladoc, spiked on the COVID hopium. And again, looks a lot like Innovative, right? So a lot of these stocks that should have been growing slow over time spiked above where they should have been, and now they've crashed to below where they should be. This particular chart, it's hard to see here, but this is a narrowing range, a triangle. Those triangles are very interesting because either it's going to crash through the bottom, or it's going to break through the top. We saw this with MP Materials a couple of years ago. Gave us our second chance to buy it. Remember, we had bought MP Materials when it was a SPAC at like $12 a share, and then it rose, and then it came back down, formed a pattern almost just like this, then it broke back out. Now it's come back down on the news that maybe rare earth metals aren't as big of a deal as we thought with the EV revolution. But this, I don't think we're going to replace it. So Teladoc combined with the AI systems are really going to drive efficiency in healthcare. And Teladoc isn't just face-to-face meetings anymore. Read their presentations, you'll see that they're handling data, and that is a big part of the equation. So between data and services and communication, Teladoc is doing really well. I think, as I've said before, they're probably a takeover target at the right price. I think you could see somebody come in and say, hey, we'll give you $40 for the whole company right now. United Healthcare did that, or Aetna, or whoever. Pick your insurance company, pick your hospital system. They could do it. I think they're going to fight that. They're going to push for a price over 100. So I think that this is probably a 4 or 5 bagger just from here. Can we get it a little cheaper? Maybe, but I think we're right on top of this one. So I want to sell some cash secured puts on this right now. I'll be going into my accounts and doing this today or tomorrow, sometime soon. I think this week on volatility, we should be able to get $2 for the July $20 puts. So you'd be making, if it got away from you, this would expire, and you'd make 10% on your money to May, June, July for about 13 weeks. 10% in 13 weeks is pretty good, right? That's a 40% annualized return. You'll take that. I think we'd still want to buy some stock, especially if it starts to break out above 27, because I think it would make a run to 50 pretty quick. Cash secured puts for ETFs, ARK Next Generation Internet, for all the reasons I've been talking about for weeks. Sell the $45 June put for $5. Again, you have to be pretty aggressive to want to do that, and you have to believe that Bitcoin is a thing. ARK Genomic Revolution, this is a stock, this is an ETF. Again, look at all these patterns. They look similar. I think it can go into the 20s, well into the 20s, but we're getting very close on this one. When you take a look at the underlying stocks, you go, okay, these are a lot of companies that are 2 or 3 years along in their business model. They're moving into profitability. They're moving away from the cap burn, the capital burn phase. So again, this is another one that we should be looking at. Now, this is at lower lows. So I do expect one more low. Might even be 2 more lows. I guess it could get down to 20-ish. So you got to be careful with this one, but keep an eye on it, because if you want biotech exposure, these ARK ETFs are pretty interesting trading vehicles. And, it's not something that you'd own forever. You'd own it until the next FOMO rally. I have an article in the queue that talks about the good, bad, and ugly of Cathie Wood and the ARK funds. I expect that one should be a pretty popular article. I'll get it to you first. I'll try to finish it for next week, but there's a lot on my plate. I've got a half a dozen more Outlook articles to write, but I think that this is something to be aware of. So if you want to get an early start on this, try to make $3 on the $27 July put. That gets you a net price of 27. I'd go very small, and then if it does get down to the lower 20s, then you do it again, because you know that the 27s will get put to you. We talked about this regional banking ETF last week. My article over the weekend was about banking, so look at that for a lot more detail. But again, 5% on your money in banks for about 10 weeks here. That's pretty good, right? That's 25% annualized. Covered calls. The only one that's overbought that you could write a covered call on is NVIDIA. I actually had that chart up. I did not put one in the article. If you take a look at NVIDIA, again, similar chart, then the crash, and now this big rebound. So it probably has a corrective period here in the middle of the year. But we found out today that Samsung is going to cut back on their semiconductors a little bit. And that's better for Micron than it is for NVIDIA, but just because of the types of semiconductors they do. But a pullback here to 230, I think, is pretty likely. You see that jitterbug zone, and it came back down. I don't see a lower low on NVIDIA. Their business is just so good and so tied into AI. If this is not a new uptrend, right? And it zigzags down here. I mean, you literally want to sell like cars and property to buy it down here. I think this is more likely just such a strong stock that it corrects, that it takes off back up when the bull market resumes or when a new bull market comes. So you can write the covered call just to bide time on this one if you own it already. If you don't own it, don't buy it. It's too expensive to buy. But if you do own it, it's a hard stock to sell because it's just such a good company. But you can sell these calls and add some income to your bottom line while you let time play out. The ETF, if you own it, that you want to sell a covered call on, I think is GLD. I think it's very unlikely that gold breaks out here in the next couple of months. The dollar typically gets stronger into May and June, and usually if there's going to be a correction into July, August, September. So we are getting out of the cyclically weak period for the dollar and into the seasonally. We're getting out of the seasonal weak period for the dollar and into the strong seasonal period for the dollar. That should have gold continue to chop. At some point, I do think it breaks out. I think that's more likely when the Fed ends quantitative tightening. I moved up the bottom fishing to 143 basically. And I actually think that you can probably buy it in the 150s or 160s. Gold as an ETF is a trading vehicle, not buy and hold forever. Gold that's buy and hold forever are gold coins, jewelry, and those little gold bars. So if you really want gold forever, do it physically, put it in a safe in your house or a safety deposit box, whatever. But this chop probably goes on until the Fed backs off. And then I think we get the breakout. So right here, you can write the covered call because it's probably going to correct down here in the next couple of months. And that'll buy you some time. So if you do own this, I don't know that you have to sell it, but write the covered call, collect some income, let it do this. And by then the option expires, covered call expires, and you can write it up. I might trade this to the long side if we do get down in here. And I'll for sure trade the long side if we get down in here. Because the fundamental problem with gold is, unlike diamonds, you can't make it in a lab without spending a ton of money. So they have figured out how to create the element for gold, but it is like zillions of dollars, right? You need like a nuclear reactor to do it. With diamonds, those are expensive gems and it's not an element, it's a mineral. So we can create minerals in the lab. It just becomes a price issue. So while they can create sapphires and rubies and other things in the lab, those gems aren't expensive enough when you pull them out of the ground to bother making them in a lab in most cases. The diamonds are really expensive and people hate that industry for what they've done. They just love the diamonds. So you can get a lab-grown diamond. I'm buying a 3-carat lab-grown diamond for $5,000. The diamond I'm buying from a lab, the diamond I'm buying that's lab grown, to buy that out of the earth with the perfection level of the diamond that I'm buying would have been $30,000, pushing $30,000. So the cost difference is so great in creating diamonds that it's worth doing. With gold, it's not. And they're never ever going to bring the cost of creating an element, because you have to do that at the atomic level, down enough to replace natural gold. So gold, being elemental, is going to hold its value. And because we're finding less of it on Earth and the demand is steady and rising, kind of that slow growth forever thing, gold is just going to keep getting more valuable. Now, at some point, they'll be able to get gold off of asteroids, but I think we're a pretty long way away from that. So go ahead and sell the covered call here. As far as the puts go, somebody asks, well, these puts aren't trading for your price. Well, if you've read Using Retirement Income Options, then you know Then if it doesn't get to $3 this week, be patient. It might next week. All right. So set up your limit orders, and if it hits, it hits. If it doesn't, that's fine. I believe that one of these was right on top of it. The Teladoc one is pretty close. It was within, what, 30 cents, 40 cents, something like that. All right, so pretty simple format. Let me know in the comments if you like this better than those big charts that don't give a lot of direction. So I'm going to tell you why I'm doing it. These are basically all trades I'm looking at for clients, and then a few more for people that I know might be a little more aggressive or a little bit more conservative. All right. One last thing, though. Remember, I've been telling you that inflation probably drops down to a 2 handle after Labor Day. I don't know if it'll be September exactly or December, but that September to December period, because of the comps, because of what I've seen in real estate, I'm telling you, you are going to see a dramatic drop in inflation after Labor Day, after the drive season. Barry Sternlicht is usually right about things, a little early sometimes, but usually right. We're seeing tech people lose their jobs, but service people not losing their jobs. The tech people will end up going back to work after they've screwed off over the summer or when they feel like it, but there's not many tech people who are hurting for money. So it's not like that's going to become a big drag on the economy. If we get that drop of inflation sometime later this year, the Fed's going to back off really quick. I don't know if they cut quantitative tightening this year, but they might. And I think they for sure do it next year by May. Might be before May. But somewhere between September and May, quantitative tightening gets cut. Does it get cut to 0? I don't know. But I think it for sure gets cut in half in that time frame. The inflation numbers just aren't sticky in most of the scenarios. You have a little bit of sticky in service wages, but so what? That's good for the middle class. We're starting to figure out ways to do more with less in materials and energy. And if we start to get healthcare leveling off and then deflating, I'm telling you, 2 or 3 years from now, 4 years from now, somewhere in the middle of the decade to maybe a little later, we are going to be talking about deflation in a few years. This inflation thing, people talking about the Weimar Republic, look, they've been wrong for decades and decades. They're having a moment. They're having a blip. And they're all going to go back to being wrong in the next couple of years, just like they've been wrong since the early 80s. Demographics drive the economy. Technology steers it. There is no scenario where inflation becomes a persistent problem. There's none. The only bad thing that could happen, and technology has fixed it, is that we wouldn't have been able to grow our food. And that's why I come back to innovative industrial. They are the right company at the right time. Don't think of them just for marijuana. Think of them as, hey, we can grow our food in there if we need to. All right. Have a good day. I've got conversations to have, 401k participants to sign up. And man, I just have a lot more to write for you that's already in the queue and ready to go. Working on all this. All right. Take care.